Hello traders, Gary Wagner here. It is 11:43 in Honolulu and 5:43 in New York on Wednesday, 13th day of April 2022, and this is the daily report for gold and silver. Gold continues to advance in price, now within striking distance of $2,000 an ounce, under $20 away from that price point. June futures are currently trading up by $5.20, about 1/4%, and fixed at $1,981.30. This morning, we did send out a series of trade alerts, raising our stops across the board in gold, silver, and GLD. We'll address those individually when we pull up some charts. Now, today's rise in gold is occurring at the same time that we are seeing dollar weakness. I draw your attention to this daily chart and this level at 100.352. That happens to be today's open, just under that, and we saw that the dollar came down from there. We might have seen dollar strength peak since we've seen a dramatic climb that really began in February and January of this year. Silver gained 0.85%, is just shy of $26 now. After factoring in the current gain of 22 cents, we have the most active silver futures contract fixed at $25.95.5. And lastly, GLD continued to move to higher ground, with the Spider Gold Trust now at $184.65 per share. We are looking at a daily candlestick chart of gold. If you recall from yesterday's show, we talked about this key level at 1900. I'm going to round it down to $65, was a level of resistance, and it was our belief that it should become support. That assumption was clarified today when we look at the daily low that came in just below this particular price point and traded higher from there. In fact, over the last 5 consecutive trading days, gold has shown a price advance. This morning, we sent out a series of trade alerts, which is unusual for us, but I wanted to explain our rationale. And to do that, I have pulled up a 240-minute chart. We had quite a volatile open, but in essence, what we saw was that volatility really slowed down during the last 8 hours of trading. Each candle on a 240-minute chart represents 4 hours, so these last 2 candles. And we were looking at the low that came in here that really prompted us to raise our stops from the initial raising to 1964 in gold futures and 61 in spot or forex gold, to 74 in gold futures and 71 in spot or forex gold. We felt that after it had made this dramatic climb and the volatility had slowed down, we really didn't want to see it even break $1,980, because our belief was then we could see a small retracement, because we correctly assumed that there would be some level of resistance near these highs that came in right around $1,985 per ounce. In fact, today's high was $1,985.80. You can see that as the top of this candle right here. And that prompted us to raise our stops in gold. We did that in silver as well as GLD. And I do want to take a look at both of those particular markets to talk about our exit strategy, as well as our exit strategy right now as we stand in gold. First, the worst case scenario is the market backs off and it hits our stop at $1,974. If that is the case, we come out of it with a nice profit, because we went long at $1,929. We are well over a 2-to-1 risk-reward ratio, and we would be happy with that. However, even though it struck that target of 85, it is our current belief that gold could continue to rise and actually not see any real resistance till approximately $2,000 per ounce. As I said, we are within striking distance of that price point. And that's the reason we tightened that up and sent out 2 trade alerts in gold this morning. Traders, maintain your current long positions in gold futures and Forex gold and your current stops, which should be at 1974 for gold and 1971 for Forex or spot gold. Next, I want to take a look at silver futures. For silver, we are using a much longer data set. We are starting at the highs that occurred at the beginning of 2021 down to these lows of last year in October, as well as the middle of December, traded to 2143. We are currently pegging our support at the 50% retracement. That is 2588. And we are looking in terms of our current levels of resistance at the 38.2% fib retracement level at 2693. Maintain your current long position in silver as well as your stop. Lastly, a quick look at GLD. Again, we raised our stops 2 times. The first time we raised it was to 182.70, and then we sent out another trade alert raising our stop to $183.10. Traders, maintain your long GLD position and your current stop at 183.10. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Of course, we will be closed on Friday in observance of Good Friday. Have a great day. Bye-bye.